Tesla shares closed up almost 7% after reporting record second quarter deliveries. It was proof that Elon Musk's steep discounts and the EV tax credit achieved his goal of higher volumes, producing nearly 480,000 vehicles and delivering just over 466,000. Several analysts raised their price targets on the stock during the day.
Bernstein here, $150 price target. We struggle to justify the rally in fundamental terms. The clearest sentiment catalysts have been market perception of Tesla as an AI company, as well as Tesla's charging standard becoming the de facto standard in North America. Neither appear financially material to Tesla.
In this video, episode 420 of Wall Street, still not quite understanding how quickly EV adoption is happening, what exponential growth is, what disruption is, that Tesla has developed the world's best real-world AI, and how completely and utterly f***ed Tesla's so-called competition really are. And while we're on the subject of Tesla's so-called competition, check out the latest Twitter subscriber-only video for one of Tesla's biggest so-called competitors, pointing the finger and claiming that the dog ate their homework. That's why nobody wants to buy their EVs. Or if you'd prefer to watch Wall Street continue to embarrass themselves and struggle even more in understanding Tesla, head over to Patreon for the latest exclusive video.
You've been very bullish on Tesla. You've been right, Dan. What do you make of the deliveries?
I think this was it was a jaw dropper relative to many expecting softness. I think those price cuts, that was the poker move that they really needed to make to put an iron fence around their install base. China, I think that's really ultimately the catalyst. And this for the bulls, I think this is really an inflection point. It feels like right now they're just getting stronger. And in terms of electric vehicles, it's Tesla's world. Everyone else paying rent.
But, you know, the point Mike and Phil both made is we're still really at 1.8 million for the year, which is where we started.
It appears David is referring to the Wall Street consensus estimates for Tesla full-year deliveries in 2023 of around 1.8 million units, which, by the way, is going to be wrong, too low, and was never really what Tesla was aiming for. It's just what Tesla threw to the dimwits on Wall Street, so they had a number to fixate on. This year, Tesla has already produced, not delivered, but again, they sell every vehicle they make. It just takes time to get to the customer's driveway. Over 920,000 vehicles already. And they have 2 factories still ramping up. It's pretty obvious that Tesla's going to be well in excess of 1.8 million units this year, much closer to 2 million. But because the number that Tesla threw to the dimwits on Wall Street was 1.8 million, that's what they're going to fixate on. It doesn't take a genius to understand that Tesla's going to be much closer to 2 million units than 1.8. If you are a genius who happens to be employed as an analyst on Wall Street, however, the penny probably still hasn't dropped. One more time. Austin and Berlin are currently ramping up. Tesla's already produced more than 920,000 vehicles this year, with 2 factories that are still ramping up and producing more vehicles, meaning the second half of this year will be significantly more than the first half. And once again, I acknowledge there'll be a gap, there'll be inventory, but even factoring that in, it's hard to see Tesla falling much short of 2 million units, but don't tell Wall Street that, at least not yet. Still buying Tesla stock. Thanks.
Estimates for the company have actually come down. So has this actually been the reason the stock has added, or the company's added $400 billion in market cap? And if not, what then? And is it justified?
Yeah, and obviously great points that they make. But I think what this has really been, it's about the AWS moment, the supercharger. That's really what changed everything. In terms, I think investors now are starting to realize the sum of the parts of this story is starting to get realized. And even though the next quarter or two, margins will trough out in terms of, I think ultimately expand to Q4 in next year. But the supercharger, batteries, and of course AI. I think right now, not given credit from an AI perspective, which is why now you can maybe start to rationalize, is this $1.5 trillion or higher? As this all plays out in terms of the Tesla story.
Well, I mean, I guess we should mention it did trade at 1.2 trillion once. It went from 1.2 to 400 billion, so it lost 800 billion. It's regained half of it, essentially, over the last couple of years.
He ain't wrong. Tesla stock today is still down more than 30% from its all-time highs almost 2 years ago. Just saying.
But again, I keep coming back to this idea. If it is this huge open-ended, AI play, they're going to be the mobility utility for the world, and it's a software company, great. Why should I care about $10,000 upside for units in a quarter? If that's the context, then why are we trading 6% higher on a roughly as expected number? And you say bears should go into hibernation. I don't think they are. Bernstein here, $150 price target. We struggle to justify the rally in fundamental terms. The clearest sentiment catalysts have been market perception of Tesla as an AI company, as well as Tesla's charging standard becoming the de facto standard in North America. Neither appear financially material to Tesla.
As I've mentioned, I completely agree that the supercharging network opening up doesn't move the needle in terms of Tesla financials. It's an irrelevant spec. I mean, it's cool, but it's not really in Tesla's best interest. I don't think it helps them commercially. It doesn't make a difference to their earnings. I mean, really, less than 1% in 2030 per my own calculations. And regarding AI, I think what Bernstein are saying here is market perceptions and sentiment around AI might be contributing to Tesla's stock being up a little bit, but they fail to see how sentiment around AI and Tesla moves the company's needle financially. But Bernstein also think Tesla's just a car company, consistently compare Tesla's valuation to car companies, and don't understand Tesla's incredible real-world AI. Most don't understand Tesla's incredible real-world AI. Tesla is on the cusp of solving autonomy and unlocking a decatrillion-dollar opportunity. Few on Wall Street, if any, understand the financial implications of this. Some assume autonomy is never going to work. Others, who have no understanding of what Tesla has done versus the so-called competition, e.g. Cruise and Waymo, not the same thing, HD pre-maps, guardrails, geofenced area, not a generalized solution, doesn't scale, fail to understand what Tesla's done and that they have no other competition when it comes to autonomy. They're confused because Waymo and Cruise are operating autonomous vehicles in very small little geofenced areas. As long as nothing goes wrong and nothing changes, everything's fine. They just don't get it. Try as they may, they're incapable of grasping the distinction between what Tesla has done and is doing versus the likes of Cruise and Waymo. Maybe some of these folks are even referring to some of the so-called autonomy leaderboards, which are completely upside down. And I get it. If you're an automotive analyst, your job isn't to understand anything about AI or neural networks or computer vision or human vision. And if you're unable to get under the surface and really see what's going on, you see Cruise and Waymo go, wait a minute. How come they've already got some robotaxis but Tesla doesn't? Just one of those things. I'm going to keep saying it until the robotaxis awaken, and suddenly everyone's going to go, oh. When he said decatrillion-dollar opportunity, he actually meant decatrillion-dollar opportunity. I really do feel bad for Bernstein. They're trying. I mean, I'm sure they're very lovely people, but when it comes to understanding Tesla, they're clueless clowns. I'm just doing my best to warn people, just like I was trying to do when I started this channel back in 2019, about 10x ago.
Now we're starting to realize that dream scenario as they get through to 2 million units, to 3. Cybertruck comes out later this year, and then that sum of the parts. That's why right now this is just another flex the muscles moment for the bulls. But the bears, they'll continue to yell fire in a crowded theater.
But to Mike's point, when does that actually trickle down to the fundamentals? Because if you use kind of that AWS example, perhaps when you can really monetize the supercharger, the AI and all of that, you can keep those prices low and keep volume churning. Is that ultimately kind of what your calculus is? And if so, when do they get there?
And it's a great question. I think the other thing is that from a battery perspective, they now could potentially lower costs over the coming years 30 to 50%. You start to factor that through. That's where ultimately, then there's the drum roll to a sub $30,000 vehicle. That's where demand really starts to expand. And this green tidal wave, this $5 trillion green tidal wave that we call that's playing out, it's not just zero-sum game. GM, Ford, others, Rivian, 313 area code is going to be successful doing it.
It's so hard to take this guy seriously. In the same breath, he's talking up Tesla. Then he boldly claims that companies like Ford and in particular General Motors, who should not be in the same conversation as Ford. I mean, Ford have a much better chance of surviving than GM, but bro, the audacity to say that GM will be successful in terms of electric vehicles. It's just impossible to take anything Dan says seriously after comments like that. GM are absolutely fucked. Their Ultium battery technology is a load of horse shit. They'll be abandoning form factors soon enough. They don't have any viable products. They're struggling to ramp production on their existing electric vehicles. They cancelled the Bolt. They have an incompetent leader. They're lying to their investors. I just don't even.
Biggest transformation to the auto industry since 1950s. But this was the quarter. The bears were saying, this is it. They're going to miss the quarter. And ultimately, they go into July 4th with fireworks, as I believe this was an inflection quarter.
Now that we've established it is definitely Tesla's world and everyone else is paying rent, and also green tidal wave and lift all boats, and legacy automotive manufacturers will be very successful as well, because obviously if they decide to make EVs, they automatically succeed. Tesla doesn't have technology they don't have or a cost advantage, so yep, good call there, Dan, especially on GM. Now it's on to a new research note from Morgan Stanley, who once again continue to say some things that make sense while simultaneously self-immolating. Another day, another research note from Morgan Stanley. Tesla Q2 delivery beat. Tesla filling the EV void left by rivals. Stock rating equal weight. Industry view in line. Price target $250 per share. For now. Tesla's more than 4% Q2 delivery beat should support 2023 expectations closer to 1.9 million units versus 1.8 million currently. Never made any sense for expectations to be around 1.8 million units, but people don't like to think for themselves, at least not in Wall Street world. And when Tesla realized this, they thought, let's tell Wall Street that we're aiming for at least 1.8 million so they can fixate on that one number, because they get very confused when we describe a compound annual growth rate over a multi-year horizon. They just don't get it. They never get it. So let's put a number out there so that they can focus on this number without thinking for themselves. At the same time, we'll also mention that we could actually do close to 2 million units this year, but they'll ignore that because that's not a number. Close to isn't an actual number, so they'll just focus on the 1.8. And unless asteroids hit multiple of our factories at the same time, we will absolutely crush this number. And then for once, Wall Street won't be disappointed. If you're a regular viewer, you'll remember me discussing this in detail. Tesla literally threw that number out there just so Wall Street go, okay, well, that's what they're aiming for. And that's where the expectations were set, even though it was obvious they'd be well in excess of 1.8 million units unless multiple disasters happened throughout the year. I look forward to a new research note after Q3 deliveries. Well, we're increasing our expectation close to... You know where that's going, right? Tesla's discounting was well known, but the market should be somewhat relieved at the elasticity of demand to lower prices, helping to moderate widespread concerns on margins. Consumers, allegedly, would love alternative and differentiating EVs, but still find Tesla to be superior value for money, continuing the company's dominant EV share position. So let's just talk about this statement from Morgan Stanley. Consumers would love alternative and differentiating EVs. This continues to be an argument for many folks. It's all hypothetical at this point in time. Why do I say that? Well, as we know, Model Y is literally the best-selling vehicle, not electric vehicle on the entire planet Earth in the first half of this year. Just one model. It seems to me that maybe consumers don't actually want alternative electric vehicles. Of course, you can argue there's a small subset of consumers who like to be different, but the numbers are the numbers and they don't lie. This is like saying that consumers really want an alternative, differentiated product to an iPhone. Yes, there are other smartphones on the market, but guess what? iPhones still dominate. For those who missed my recent Patreon video, featuring a Wall Street analyst who just literally doesn't get it, discussing Tesla. He was expecting Tesla to miss on their production and delivery goals because they don't have any new vehicles. They don't have enough products available. Again, in Wall Street world, you need 27 different models in every category to sell lots of vehicles because consumers want alternatives and lots of differentiated products. And again, there is a subset of consumers who just desperately want to be different. Most of these folks are just trying to signal what a unique human they are because their personality isn't able to do that for them, in my opinion. Not judging, just observing. But this is a subset of consumers. What makes me say this? Once again, please refer to Model Y being the best-selling vehicle on the planet. They're everywhere, yet sales continue to increase over time. I really believe that most analysts, especially covering the automotive industry, are mistaken. Well, the automotive industry in general thinks that they need lots of different models in every category. Therefore, that must be true. Therefore, if Tesla doesn't have lots of vehicle models and differentiation, there's going to be big problems. They can't keep selling lots of vehicles if they don't have a trillion different models. So there is a grain of truth in what Morgan Stanley is saying here. Some consumers, sure, they would prefer a different vehicle, not because it's going to be better or better value or more compelling, but just to signal to the world, look at me, I'm different. I don't buy the best vehicle. Instead, I bought a different vehicle so you know I'm unique. But I think these consumers are in the minority again. Please refer to the Model Y sales figures. Many market observers thought Tesla would need to cede EV market share as a mathematical certainty given the introduction of attractive models from traditional OEM rivals. What instead appears to be transpiring is a slow introduction of new EVs from traditional OEMs, and in some cases a throttling back, which may be providing an opportunity for Tesla to achieve a higher for longer market share versus expectations. So, I'm recording this in July 2023, just to be clear. Listen closely. Morgan Stanley actually just published this. Relative to market expectations, which, by the way, are extremely low, we continue to believe overall EV penetration will progress at a lower pace through 2030. Okay, one more time. Relative to the already absurdly low market expectations for EV penetration, Morgan Stanley believe that EV penetration will be even slower than the absurdly low expectations through till 2030. And this is a new research note. I just do not know what they are smoking, but hopefully they'll save some for me. With Tesla achieving a higher proportion of the market than expected, a smaller pie, fucking hell, dude, with a larger slice going to Tesla. This paragraph clearly written by Derp. Key takeaways from the Q2 delivery and production update. Tesla delivered 466,100 vehicles while producing 479 in the quarter. Tesla collected sell-side consensus was 446,000. while Morgan Stanley, presumably, stood at 432.7 thousand. Deliveries beat consensus by a bit more than 4%. Tesla built around 14,000 units of inventory worth around 700 million, suggesting approximately 2 days supply growth in the quarter. More on this later in the video. Annualized Q2 production comes in at over 1.9 million units. Should help ease fears of demand slowdown. Bro. I mean, I said it at the time. I always repeat myself. There was no reason to be concerned for demand, except a complete absence of the ability to understand reality. You guys heard me saying it over and over and over and over and over. Everyone thinks there's a demand slowdown. There's not. More showing that price cuts have worked. Key changes to our Tesla model following the Q2 delivery and production update. Oh no, I think we see derp again. What have they said? We increased our 2023 delivery estimate to 1.9 million units from 1.82 million previously. You sitting down for this? Our 2030 deliveries increased to 7.9 million from 7.85 million previously. We're now in July 2023, and Morgan Stanley just published a new note in which they disclosed their estimates for Tesla deliveries in 2030 are now at a whopping 7.9 million units. And the company is already at an annualized rate of about 2 million in 2023, with 2 factories currently ramping, another one early stages of construction, with a whole new vehicle model that's going to blow open a huge total addressable market in the multiple millions of units per year, plus Cybertruck production about to commence, and they're at 7.9 million units. Please remind me to revisit this in a decade. God damn. 2023 gross margin, excluding credits, increases to 18.5% from 18.4% previously, driven by higher volumes. Yeah, cool story, bro. A few very minor tweaks to non-GAAP EPS. We leave our $250 price target unchanged. Our price target is based on a hybrid sum of the parts, where we add together the DCF-derived valuations of a range of Tesla's business lines adjusted for eliminations. What a word salad. The bear case valuation, $90 per share. In short, the bear case, 5.5 million units per year by 2030. At a 13% EBITDA margin. In the bear case, Tesla trading at 3.8 times Morgan Stanley's 2030 EV EBITDA. The base case, $250 per share. As we just heard, 7.9 million units in 2030. Tesla Mobility contributing $11 per share with a fleet of 500,000 cars, as in robotaxis, at $1.70 per mile. Network services contributing $60 per share on 20.5 million monthly active users, each bringing in about $100 per user by 2030. The base case price target trades at 11 times 2030 EV EBITDA. And the bull case valuation, which in my opinion is going to be quite embarrassing when 2030 rolls around, because this is what Morgan Stanley thought was sort of the upper limit. The bull case, in which they believe Tesla's going to deliver just 10 million units in 2030, half Tesla's publicly stated goal, with 22% EBIT margins, a ride-sharing fleet of 1 million units, as in 1 million robotaxis, and an install base of 25 million monthly active users at $120 per month in revenue. In the bull case, Tesla trades at 20 times 2030 EV EBITDA. It's important to understand that Morgan Stanley have a history of massively underestimating Tesla every step of the way. Now here we find ourselves again in July 2023, in which they believe their bull case scenario, the very optimistic, most things go right scenario, Tesla falls catastrophically short of their own publicly stated goal, coming in at just 10 million units delivered in 2030. In the bull case, even in the most bearish of scenarios, it's very likely Tesla will be well past 10 million units in 2030. In the absolute worst case scenario, I do not know what these guys are smoking, but I'd love some. Now over to Twitter. What we're looking at here is Tesla's Shanghai production, in essence, going back to 2020, broken down by quarters. You might note something. We have a record quarter for Q2 in 2023 of 247,000 vehicles. That said, the Shanghai factory now is pretty much at max capacity. In fact, that occurred about 2 quarters ago. Keeping in mind, Tesla does continue to eke out incremental increases in capacity. They delete parts, processes, robots. They can produce a few more vehicles from the same factory footprint. But Shanghai is pretty much maxed out for now. This is what a Tesla factory ramp looks like, visualized. It can be a little bit unpredictable, especially when there are fascist shutdowns. I wonder if anyone can see on the chart where the fascist shutdowns occurred. Anyone? Any takers? Yeah, no, it's definitely not clear where that was, so totally don't know. But I just wanted to lay this out now visually so you guys can think, isn't Tesla currently ramping a factory in Berlin and another factory in Austin? They are? Okay, maybe I could use this data as a starting point for what the ramps may look like. Now keep in mind, Morgan Stanley, in this research note we've just gone through, claim that the already absurdly low EV adoption estimates are actually too aggressive and they believe there is a slowdown and that EV adoption is going to be even slower than the already embarrassingly low EV adoption estimates. However, Tesla seems to disagree, which is why instead of only building the Shanghai factory and going, all right, well, EV demand is going to slow down, so let's not build any more factories, they currently have Berlin and Austin ramping up. They've announced the Mexico factory as well. That's in the early stages. And it's likely we'll hear in the next 12 or so months of maybe 1 to 2 more factory locations as well. The reason I'm showing this chart is just so you guys and girls can think to yourselves, 2.5 years from now, what might Tesla's global production look like? Shanghai is now already at an annualized rate of give or take 1 million units. An additional chart I'd like to show is this, Tesla China insurance data over 52 weeks. In yellow, we've got this year, 2023 to date, and in green, we have 2022. Now, you might notice something. 2023 seems to be fairly smooth. However, in 2022, we have a bit of a wave shape. Why does the word wave ring a bell? Oh, that's right. Delivery wave. You remember when Tesla told us, hey guys, we've decided that we're no longer going to play the dumb Wall Street game and bend over backwards and jump through our own asses just to deliver X amount of vehicles in the quarter and pay expedited shipping because that's silly. Instead, we're going to, wait for it, unwind the delivery wave. That's what this looks like visually. As a result of this, and Tesla explicitly detailed this recently, Tesla is likely to maintain consistently higher levels of inventory toward the end of quarter. See these waves? No more waves. The reason I point this out is because still today you hear many of the bears out there claiming words to the effect of, clearly there's a demand problem because Tesla produced more vehicles this quarter than they delivered. In fact, inventory grew quarter over quarter. It's the end of the world. The competition is coming, etc. I continue to maintain that Tesla will sell every vehicle they make all decade. Yet every quarter between now and then, end of quarter, you're going to hear the bears say the exact same fucking thing. Tesla inventory increased, there's no demand, it's the end of the world, Tesla's going bankrupt, the competition's coming, blah, blah, blah. I'm just flagging that now because I can see it coming from a mile away. Tesla themselves told us they would be unwinding the delivery wave, which is exactly what they've done. We can see this visually. I mean, if you compare the yellow to the green here, it's pretty clear. This yellow looks like a fairly straight line and green, big waves. Furthermore, as I mentioned, Tesla inventory is likely to increase at least in line with production. This is to be expected. But disingenuous bears will drill down and focus on the absolute numbers of vehicles in inventory and compare that number to last quarter and say, oh, there's a problem. Look, the number of vehicles in Tesla inventory this quarter is higher than last quarter. I'm going to ignore the fact that they made more vehicles this quarter than last quarter and everything's scaled roughly in proportion and say, oh my God, no demand. So to recap, in spite of all contrary evidence, Morgan Stanley believe and have just publicly stated in a new research note that they think the market is massively overestimating how quick EV adoption will happen. In July 2023, Dan Ives continues to remain under the impression that legacy automotive manufacturers will also be successful in transitioning to EVs. I guess apparently all those plans have managed to dazzle him. Others on Wall Street remain a little bit confused about Tesla's valuation and what the hell they have to do with AI. Meanwhile, Tesla continues to execute on their plans and scale up production and break records after records after records, which they'll be doing all decade. I kind of thought by mid-2023, in the face of all the evidence, that Wall Street would really be getting it by now, but apparently not. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.